2025 is emerging as a defining year for digital assets. Regulatory clarity, including the Genius Act and new ETF approvals, setting the stage for mainstream adoption. Now, major financial institutions and state governments are now deploying stablecoins and tokenization strategies, moving digital assets from pilots to permanent platforms. Now, tokenization has surpassed $30 billion in value, with treasuries, private credit, and real estate now on the blockchain. And stablecoins are gaining legal as well as regulatory legitimacy, while public markets embrace digital assets through strong debut listings as well as new digital asset treasury companies. Joining me live here at the New York Stock Exchange is Devin Ryan, Head of Financial Technology Research for Citizens. Devin, great to have you here. Thank you so much for joining me.
Great to be here, Remy. Thanks for having me.
Well, I understand that you've said we are at an inflection point. So how close are we to actual mass adoption?
So I think we're getting very close to that, and really, the pieces have to come together here. We're still working in a kind of a regulated world where the rules of the road need to be formed for crypto, and they haven't been there for the past, and that's been challenging for real institutions to come to the space. But what we've seen this year is kind of pivotal moments. You had the Genius Act pass, which kind of opened the door for stablecoins to be able to be in the regulated world in a real way, and we're seeing really nice scaling there. But the bigger piece that's coming, in our opinion, is around tokenization. And tokenization is going to come together with the Clarity Act, which is sitting in the Senate now, but we think will get passed over the next few months. And once that happens, that's going to start this kind of big surge of traditional financial institutions coming in to the space, and that's going to drive the mass adoption that we think is coming. So, 2026 is going to be a huge year. I don't think we'll necessarily get to full mass adoption, but the pieces are coming together where it's kind of right on the horizon here.
Yeah, and you brought up the regulatory part of the equation here. So 2025, we have seen progress, especially with the new administration coming into the White House. But what do you expect in terms of actual timeline as we head into 2026?
Sure. Well, you have the SEC chair, Paul Atkins, is very aggressively, I think, out talking about wanting to bring assets on chain, and that this is good for the capital markets. And so you have, I think, a motivated regulatory body that's the primary regulator, and then you have Congress, which is really, I think, in a bipartisan way coming together, which is actually something that's unique right now in the world, where you actually have legislation that both parties want to push through. And so it's looking like probably early 2026 is when you'll see the Clarity Act pass, but that's going to then push this I think aggressive agenda from the industry to move forward. So we are getting to that, I think, very soon here, and then that will set off the chain. But a lot of companies are already preparing behind the scenes. You had BlackRock, $10 trillion asset manager, Larry Fink and Rob Goldstein, the COO, write a piece in The Economist just last week talking about how they believe that virtually all assets are coming on chain. So you've got the largest asset managers, you have the regulators, and you have Wall Street coming together. So the incentives are aligning to really, I think, accelerate this mass adoption theme.
And speaking of which, last week SEC Chair Paul Atkins was here at the New York Stock Exchange talking about capital markets, the next 250 years here in America, as well as crypto innovation. But as we head into the new year, give us a better understanding of your expectations when it comes to deal making and digital assets as well as M&A.
Yeah, so I think, great question. There's going to be a lot of M&A in the space, and really, if you think about it, you've got the incumbent firms that all see that this is a technology that's real and they need to integrate into their systems. And so you can't just go out and hire a handful of engineers and get into crypto. You need to buy firms to get there at scale, at the speed that they need to get there. So I think there's going to be a lot of M&A coming from traditional firms trying to get the capabilities. And then the digital asset native firms are looking for scaled partners, are looking for the regulatory know-how, trusted brands. And so I think there's going to be a lot of selling from those companies as well. So I think there's been a fair amount of M&A and rumors of M&A just even in 2025 as the world's opened up to that. 2026, I expect there's going to be a pretty material acceleration, and also IPOs and just more capital raising and capital markets, given if firms want to take advantage of this moment and with the window being open, move forward quickly.
And Devin, while I have you here, I do want to ask you about prediction markets. So where does that fit into finance, especially since we're hearing some key names getting involved with financial institutions?
Yeah, so I think prediction markets are going to be one of the biggest themes of the next few years. It's still very small, and it's kind of in the speculative shadows, primarily in sports. But if you look at the scaling that we're seeing right now there's about $10 billion of volumes on prediction markets every month, compared to over 10 trillion in the equities market. Firms like Robinhood that we cover are doing about a quarter of all volumes in the space. They're buying an exchange because they're getting product market fit, and it's the fastest growing business within Robinhood ever. We think that the next phase here is institutions are going to be coming, and prediction markets are just a way to express risk, but in a very binary way. Whereas you buy an option today, and you may think you know what the outcome's going to be off of, say, the Fed's going to lower rates, and the option of the stock should go down, but it goes up, and so there's a lot of cross-factor risk in other derivatives markets. I think prediction markets are going to change the game directly, but then also institutions are going to embed them into their processes. So it's going to be a really big deal. I think we're going to see scaling of many multiples. Also, once we get some more of the regulatory clarity, that's going to be, I think, needed for that space as well.
And finally, before I let you go, you just mentioned the Federal Reserve, and of course we're all anticipating the rate announcement on Wednesday afternoon, as well as the dot plot and Fed Chair Powell's comments. But when it comes to prediction markets, what is your time horizon? What do you expect to see? And when it comes to the regulatory aspect, what are you paying attention to and why?
Yeah, so I think there's a lot from a regulatory perspective. There's similar issues to regular markets, so insider trading and rules around making sure that the markets are not incentivizing bad behavior. And so I think that there's going to be some regulatory rules that come together, but the challenges aren't that great because there's a lot of parallels to traditional markets that can be applied here. So I think those are just, the technology is a little bit ahead of the regulatory backdrop, but that's okay because there's a demand for this technology, there's demand for these markets. So the markets are really the signal, and you saw it in elections, you've seen it in other places where you have media or others that are saying one thing's going to happen. The prediction markets are where the money is forming, and that's driving both the outcome of the prediction, but then there's so many other signals you can get from that. So if you're predicting the company's going to miss earnings, and the market's saying that, well then you would potentially bet on that prediction, but then there's many other trades that you would put into your book resulting from that outcome. So it's really going to drive signals for institutional investors, whereas that's going to be where the big liquidity comes in over the next couple of years. So I think we are early days, but it's scaling at many multiples. Robinhood's volumes have doubled every every quarter for the last 3 quarters, and then in October alone, we're bigger than all 3 Qs. So it tells you the pace of scaling right now is like something we haven't seen in a very long time.
Well, separating the signal from the noise is key here. So thank you so much for joining me here at the New York Stock Exchange today, and thank you so much for sharing all of your insights.
Great to see you, Remy. Thank you.
Thank you.